There's been north of 40 countries that have brought their gold back from both the Bank of England and the New York Fed, which these were the two areas, the two venues that provided liquidity, Western rule of law, safety, and gave direct access to the LBMA and the COMEX, the two fugazi, crooked, manipulated, and starting to show the issues of said manipulation through delivery requests. And I think they're like, yeah, maybe we should get while the getting is good. And we'll see how long it takes for them to return the gold this time. But quite frankly, I think they're late to doing this. And I think you would see more and more countries decide they would want to do the exact same thing. Quite frankly, I think anyone that would leave their gold at either place is silly and missing a bigger picture.
The global financial landscape is experiencing a seismic shift as nations lose confidence in the traditional monetary system that has dominated international finance for decades. Rising geopolitical tensions, currency debasement, and the weaponization of financial systems have created an environment where countries are questioning the safety of storing the most precious assets in foreign vaults. Andy Schectman, president of Miles Franklin, with over 30 years in precious metals, warns that manipulated gold markets are being exposed through rising delivery demands. This is prompting countries to repatriate their gold reserves while they still can, as leaving gold in Western vaults has become risky amid collapsing global financial trust. Germany and Italy, the world's second and third largest gold holders, face growing pressure to bring their reserves home from New York due to rising geopolitical risks and criticism of the Federal Reserve. France moved most of its gold to Paris in the 1960s, while Russia has always kept its gold domestically, a strategy vindicated when the West froze Russian assets during the Ukraine conflict. Schectman explains that since the U.S. abandoned the gold standard in 1971, the dollar's value has sharply declined. Gold, once fixed at $35 an ounce, recently reached $3,500, showing the dollar has lost over 99% of its purchasing power in his lifetime. The relationship between gold and the dollar has long been inverse, but since 1971, the dollar has lost over 87% of its purchasing power, with some analyses suggesting the real decline could be as high as 98% when factoring in revised inflation metrics. The dollar's decline spans a century. Since 1913, the greenback has lost nearly 96.4% of its purchasing power, with some estimates approaching 99%. This erosion coincides with the Federal Reserve's establishment and represents a shift from sound money to fiat currency management. Before we begin, don't forget to like, share, and subscribe. 97.4% of viewers haven't subscribed. Join the 2.6% who have by clicking that button and turning on the bell icon.
Well, Italy and Germany are supposedly the second and third largest holders of gold in the world. And I think when you realize what Germany went through the first time, you're talking almost $250 billion worth combined, German and Italian gold. And why? Because it's a bigger symptom, it's a symptom of a bigger problem, lack of trust. And that's the issue here, is that this is a trust-based system. When it was backed by gold, you didn't have to trust as much as you could redeem it for gold. That was the promise. Always return your dollars at a fixed rate of $35 an ounce if you were a foreign government. Well, at the end of World War II, after Europe had been ravaged by 2 world wars, it made sense to leave their gold here with the U.S. They would give us their gold, which was a non-interest bearing asset. We would pay them $35 per ounce. They could take that money, invest in our treasuries, earn a yield on it, and always exchange it back for $35 an ounce. That was a good system. The dollar was, in fact, as good as gold, and we had no inflation. And then we saw what happened since 1971. Gold was $35 an ounce at that point. It just touched $3,500 not too long ago. That's 100%. It's lost 99% of its value plus in my lifetime. I was born in 1970. Well, you add into it all of the issues regarding the current political environment, the lack of trust that was brought in, anointed in the seizing of $5 billion in Russian treasuries. It's not our job to be judge, jury, and executioner when you're talking about a global reserve currency and issuer. And the world doesn't trust us anymore, including our allies. G7 members, they don't trust us anymore. And that's exactly what this is all about. And you're right, there's been north of 40 countries that have brought their gold back from both the Bank of England and the New York Fed, which these were the two areas, the two venues that provided liquidity, Western rule of law, safety, and gave direct access to the LBMA and the COMEX, the two fugazi, crooked, manipulated, and starting to show the issues of said manipulation through delivery requests. And I think they're like, yeah, maybe we should get while the getting is good. And we'll see how long it takes for them to return the gold this time. But quite frankly, I think they're late to doing this, and I think you would see more and more countries decide they would want to do the exact same thing. Quite frankly, I think anyone that would leave their gold at either place is silly and missing a bigger picture. Right now, it should be higher silver allocation than gold. Ultimately, it should be higher gold than silver. But this is one of those rare moments in time where the value you're getting in silver is just too hard to ignore. And throughout most of history, gold or silver would have, at least over the last 100 years, you're talking would be valued at anywhere from 1/50th of an ounce to 1/80th of an ounce. But it's coming out of the ground right now at a ratio of 1 ounce of gold to 7 ounces of silver. And so, 1/7. And so, but it's priced at 1/100th. And so you're way outside of normal valuations, historical valuations. It's one of those opportunities that don't come around very often. So while I do believe ultimately the place to be is gold because it is being reintroduced into the monetary system, I think the value you find in silver is second to none. And this would be the time to take a calculated speculation and be heavier in silver with the intention of trading it to gold when that ratio normalizes, and history says it will. This is an anomaly in every sense of the word.
Market analysts are closely watching the recent performance of precious metals amid escalating geopolitical tensions and shifting diplomatic strategies. Andy Schectman observes that gold's $100 drop and silver's $1 decline since June 12th represent what he characterizes as a, quote, managed decline rather than a response to geopolitical events. Despite these recent setbacks, Schectman expresses admiration for how strongly both metals have maintained their positions in the face of downward pressure. Gold is on track to end the week with a loss of nearly 1.90%, following President Trump's decision to delay military action against Iran in favor of diplomacy. Silver has struggled even more, staying under pressure for 3 straight days, with its decline accelerating after Trump announced a 2-week pause on any decision regarding U.S. involvement in the Iran-Israel tensions. Despite the recent price declines in both gold and silver, market sentiment remains fundamentally bullish for precious metals. Investors continue to maintain substantial long positions in futures markets, signaling widespread expectations of further price increases in the coming period. This underlying optimism suggests that many market participants view the current weakness as temporary, potentially driven by managed selling, rather than fundamental shifts in supply and demand dynamics. Let's get back to the interview.
Well, I think the conventional wisdom is that gold and silver drop due to easing of the Israeli-Iran tensions. The signing of the temporary or hopefully the long-lasting ceasefire, but that's not what it was. I mean, you had options expiration. You have the end of the quarter, which options expiration was today, mind you, and I think it's interesting that they really had a hard time keeping it at or near $36 an ounce. And if you look at the amount of contracts that they had trying to keep it below that level, it's really quite incredible. There were 76,617 short contracts to keep the price down. It's an all-time record. And here it is. It's right back up. The physical demand at that level is extraordinary. But to see gold down $100 since June 12th and silver $1 lower, that's not a reaction to geopolitical events or a cooling of the narrative. This isn't a natural correction. It's a managed decline, and it started Sunday night, and it went all the way down to today. But not only do we have the end of quarter and the options expiration, you have the July contract, which will go off the board, I believe, on Monday, the first day of delivery requests. And so we've been seeing tremendous deliveries come out of COMEX. I would expect to see that continue. Look, the prices were reacting long before any conflict had arisen in the Middle East. certainly the one that we're focusing on. But since President Trump was elected, you've had almost 820 tons of gold stand for delivery done again, and somewhere in the neighborhood of 9,000 tons of silver stand for delivery. The trend is not stopping, quite frankly, and you can see the amount of effort that the banks are using to keep it down. I mean, it's extraordinary when you figure each one of these contracts on silver are 5,000 ounces, and they're trading 76,617 contracts short to keep the price down. That reeks of desperation, and it reeks of stupidity, if you ask me, because you have a good portion of the world who is using that effort, that manipulative effort, to stand for delivery and rewrite the narrative. You could say the same thing is happening with platinum at the same time. So I think that how well gold and silver have held up through all of this is noteworthy, to say the least. So yeah, I'm actually quite surprised and quite optimistic that this correction is behind us, and that the amount of effort needed to hold it down is something that has to have the banks on their heels and very concerned. I think you're beginning to see it. I think you're beginning to see, maybe this is part of the reason we're seeing so much in the way of deliveries to back these naked contracts, to have the physical. I think it just will be much harder for banks to continue to play this game where they're using unallocated paper derivatives, which will dramatically affect the balance sheet. And so, yeah, I think this is an environment where we could expect to see much higher prices after the Basel III, maybe not immediately, but what it ought to do is make it much more difficult for these players to continue to suppress the price with unallocated paper, especially if they're standing for delivery, and especially if it starts to really negatively affect their balance sheet. This will become a game, I think, where that kind of position is considered foolhardy. So yes, ultimately in the long run, I think it's one of these deals where we can't expect it to happen just like that the moment the switch is flipped. But I think it is a trend that we are seeing where these banks already, it appears as though they're realizing this in gold. We haven't seen them capitulate in silver yet, but I think that's coming. And quite frankly, to have these unallocated naked positions against the backdrop of global demand and global offtake is as stupid as a mud wall in a rainstorm. And I think it will have a dramatic effect. Maybe not all at once, maybe not at first, but over time, absolutely it will.
Gold and silver continue to demonstrate strength despite coordinated efforts to suppress their prices. With record short positions failing to hold them down and physical demand remaining robust, both metals are proving their resilience. As delivery requests surge and confidence in paper markets fades, gold and silver are once again asserting their role as reliable stores of value in an increasingly unstable financial system. Will silver outperform gold as market pressures build? Let us know in the comments below. If you found this video helpful, don't forget to like, share, and subscribe to our channel for more insights on gold and silver. 97.4% of viewers haven't subscribed, so join the 2.6% who have by hitting that button. Thanks for watching, and see you in the next one.